CNBC-TV18.
And the first tick on the Nifty is a cut of 50 points, and on the Sensex, it's lower by 190 points.
Let's bring up the mid-cap index, and you can see that once again that's holding very solid.
So the Nifty is down by 40 points. It has seen some more selling pressure from the top.
This point in time, it's more off from the highs than the lows. I mean, the Nifty is about 100 points, almost 100 points off the highs, and we're about 40 points off the lows.
Once again, this level of 18,400 has proven to be way too formidable for the bulls. I mean, you can have several reasons. Today, it was more of global action that kept the market subdued.
Another day, another range-bound session where the Nifty saw buying closer to 18,250 and selling closer to 18,400 as well. It was one of those sessions. You're watching us here on Markets Today, a show where we track about 6 hours of the day's trading action in 5 headlines. I'm Mangla Malu. Let's talk about those headlines itself. D-Street fails to hold on to intraday recovery. Nifty and Sensex end at the day's low, led lower by the Nifty Bank. Financials, they continue to underperform, led lower by ICICI Bank and HDFC Bank. However, mid-caps outperformed the blue chips. Hindalco fell close to 1% despite a decent fourth quarter. Its standalone business fared well, beating estimates on all fronts. Sun Pharma and Biocon soar on a strong fourth quarter set after they beat expectations on all counts. However, JSW Energy gained even in a mixed fourth quarter set. Dixon Tech and Dreamfolks gain as they deliver in their fourth quarter. Sudarshan Chemicals and Linde India Q see a strong performance in the fourth quarter. Polyplex, however, fails after it reports losses of over 11 crore rupees and the promoters sell 24% stake in the company. Mahindra CIE gains after M&M sells its remaining stake in the firm, sells shares for over 447 crore rupees apiece, higher than what was estimated. The sale lifts overhang of selling pressure. On the show, we have a packed lineup for you. We have Andrew Holland of Avendus Alternate Strategies. In Big Corporate Voices, we have Kiran Mazumdar-Shaw. At the same time, we also have Prashant Jain, who's the Joint Managing Director of JSW Energy. Let's talk about the markets itself then. The Wall Street failed to hold on to the intraday recovery that it saw, ended at the lows of today's trading session. And the Sensex too closed 0.25% in the red. The financials continued to underperform, with HDFC Bank and ICICI Bank being the top losers on that index. The Nifty Bank actually fell over 0.6%. The mid-caps, however, relatively outperformed the blue chips, but that too saw a last-hour sell-off. Prashant joins in with all the day's trading action. Prashant.
Well, it was neither here nor there. The market sold off early on. There was a sharp rally which took the index to the day's high on the Nifty. And then in the closing 20-30 minutes of trade, actually almost 40 minutes, the market kept selling off. And we ended not at the day's low, but 60-odd points lower on the Nifty. Banks also a similar kind of picture. Sharp selling coming through in the final 30-40 minutes of trade that we saw. Now, on the Nifty, some of the Adani stocks reversed. They'd been gaining for the last 2 days. So enterprises and ports were lower. And there was some weakness in some of the other, mild weakness in some of the other non-Nifty Adani stocks as well. Tata Motors, ICICI Bank also stood out as prominent losers. There were gainers in the form of Sun and DRL from the pharma space, and Hero looked up as well in trade. Market breadth was almost 1:1, and this kind of is a far cry from the earlier 2.5:1 we had mid-afternoon when the market was up and up. But by close, it was more even Stevens. Having said that, you know, the advantage I would still say is with the bulls, because when you look at price action, you also have to look at volumes. And the list of stocks which went up on strong volumes is far longer than stocks which went down. But since, we're looking at a down market today, let me start with losers. Polyplex, Sangvi Movers, Kirloskar Engine, HPL Power, Sequent, Chempla, Sanmar were some of the names. Now to the gainers, the volume-led big gainers. Dixon, Mahindra CIE, lots of news flow related. Deepak Nitrite, Adani Total, EIL, Loris Laboratories, CET, Schneider responding to numbers. NCC reversing yesterday's losses, Sudarshan Chemicals, KPIT Tech, Chennai Petro, and so on and so forth. It's a long list there. I would still say watch for the 20-day moving average, which is about 100 points away from where we left off today, as the reversal point for the market. Today, later, we get the FOMC minutes, and I think global markets will be very keenly watching for all the headlines around the US debt ceiling. Back to you.
Well, it is the US where everyone will be eyeing any sort of, negotiations coming in, any sort of conclusion in sight with regards to the debt ceiling would perhaps, cause the sentiment to turn for the global markets and in turn the emerging markets as well. But let's get in some market opinion. Andrew Holland, who's the CEO at Avendus Alternate Strategies, believes that the market may start pricing in interest rate cuts by the end of this year. In fact, he also said that one should wait a quarter before investing in the IT space. Remains bullish on banks.
If the debt ceiling negotiations are favourable, which we expect they will be, and the Fed do a skip, and this is a new narrative now, we're going to skip making a decision on the next Fed meeting on June 13th, 14th, then the markets will start again thinking about interest rates falling by the end of the year, because a skip is the next stage is to say pause. That's for sure. He hasn't quite gone there yet. I think that's what markets will like. IT, I think, you know, it's had a reasonable rally over the past few weeks, and I think that's on the back of, you know, obviously NASDAQ moving higher. So it's not really the growth prospects for the tech sector which have improved, and obviously our stocks have followed on that tailwind because the correlations are quite high. I still think there's a quarter you can wait before buying IT.
Right, so that's a market opinion. Let's talk about the second headline today. Hindalco reported an overall beat in the fourth quarter results with regards to their standalone business. The revenue came in at 20,000 crore versus an expectation of over 14,400 crores, 18,400 crores rather. The company has reduced its net debt as well as compared to the end of December last year, and the stock remained under pressure, however, in line with how all the other metal stocks were performing. Nigel joins in with the key numbers of the quarter went by. Nigel.
Well, Hindalco's numbers were good, actually. You know, for Hindalco, we already have Novelis's numbers with us. So what we're looking at is a standalone business. And that was quite good. We look at three big parameters out there because volumes, well, for the aluminium business, they're functioning at almost optimum utilization levels at around 340,000 per quarter. So that was par for the course. But on the copper side, the volumes look quite good. And focusing on the three broad numbers, well, the aluminium business, in lower input cost, better realizations, that's played out. Because the EBITDA number came at around 2,300 crores odd, which was better than what we were working with. The other one we were looking at is the copper business. Out there, you had operating leverage play out because the volumes were higher, came at around 117,000 odd. We were working with a number of around 105,000. And TCRC margins out there have been quite stable. The kicker comes in from the lower debt, but remember the street was factoring this in because in Novelis's numbers itself, there was a big working capital release of more than 5,000 crores. Coupled with that, at the India operations, they've gone ahead and repaid their debt. So all in all, these numbers looked quite good. The only problem is the street is a little bit skittish in terms of the global slowdown as well as what's going on in China. For the past quarter, though, the numbers get a thumbs up.
All right, Nigel, thanks a lot for that. Let's move on and let's talk about another headline that we've been tracking. And this one is from the pharmaceutical space. Sun Pharma rallied over 2% at the back of a strong fourth quarter performance coming in from the company. The company reported about 6.3% margins versus just about 1% last year. Net sales too have grown on a quarterly basis. Ekta joins in with the details of that. Ekta.
Thanks for that. Well, yes, definitely a good performance which is coming for Taro. Taro ended up around 3.5% in US trade. It is the best performance for Taro in 2 quarters. There was a Q-on-Q recovery which came through, which is definitely a positive. The reason for the good numbers, which I'll just come to, is possibly improvement in the proactive franchise that Taro acquired in late of FY22, improvement in the pricing and demand in the US generics business. So Q-on-Q net sales came in at $146.6 million versus $139.2 million. Margins improved to 6.3% versus 1% year-on-year, and profit just about flat on a Q-on-Q basis. Elara says that the Taro numbers improved significantly. The pickup seems sustainable. They could compensate for weakness elsewhere, such as Concert Pharma, which is an acquisition made by Sun recently. Macquarie has an outperform rating on Sun, target price of $12.75. According to them, Taro has posted its Q4 results, where revenue and EBITDA has beaten estimates according to them.
All right, let's move on then and talk about another thing which is on our radar. More pharma earnings, actually. Biocon gained over 1% on the back of an all-round beat coming in. The stock opened much higher, thereafter ended at the low point of trade, but marginally in the green as well. In fact, they recorded a 68% growth in their EBITDA on a year-on-year basis. The business was led by their biologics business. We had a conversation with the management. Kiran Mazumdar-Shaw said that they had guided for about 1 billion in terms of revenue coming in for FY23 and margins. Plans to build on that for FY24 as well.
We had guided for an exit trajectory of $1 billion, which is what we have exited at. And I think we will build on this $1 billion trajectory during FY24. As you know, we have much to look forward to, starting with the adalimumab launch in July this year. And we also hopefully expect our approvals for Aspart and bevacizumab during FY24, which will add to the growth potential of our biosimilars business. We also are tracking well in terms of transitioning the business from Viatris to Biocon Biologics. And so, as you know, the biosimilars business is the key driver of growth this fiscal for the Biocon group. A number of factors aided margins. I think one of the activities we had this quarter was a good licensing deal that we struck for one of our biosimilar assets, which we decided to reprioritize. And we've had other contributions from our businesses that has improved our margins. But overall, I would say that it's really the strong fundamentals of our business that you should look at. You know, the R&D spends for this fiscal have been at 1,119 crores, which is almost double of the 595 crores we had last fiscal.
Right, let's talk about some more earnings. Then JSW Energy saw a surge despite reporting a 69% decline in net profits on a year-on-year basis. We spoke with the MD CEO Prashant Jain, and he said coal prices have corrected significantly. Also gave his targets for the EBITDA numbers going forward.
International thermal coal prices have been falling dramatically, and if you see the the average coal price in the Q4 was $138, and which has fallen now to $102. And a lower CV coal basis, it is already in double digits. So the fuel prices will be very, very attractive in the current quarter and going forward. That's very interesting trend. And secondly, the merchant prices are also hardening up. On a daily average is around north of 5 rupees, and last year average was 5.96 rupee. So it is a quite good attractive tariff now, and all our units are running on a whichever is the merchant capacity are running, and we are taking advantage of that. Normalized EBITDA of the asset will be 1,650 crore, which I explained in my last interview, as compared to the last year EBITDA of around 1,200 crore. So there is a 450 crore of EBITDA improvement plan. Out of 130 turbines which were down, we have already put 105 turbine already put into use, and balance will be up and running by first week of June.
Well, let's talk about some macros. Then India's FY23 GDP growth may actually breach the 7% mark, which was earlier estimated by the Reserve Bank of India, and that's the word coming in from none other than the Reserve Bank chief, Shaktikanta Das himself. He spoke at the CII annual session. Governor said that the central bank will actually stick with the 6.5% growth target for the next fiscal, despite the IMF having a lower growth figure. And he also said that retail inflation will perhaps look softer or cool in April as compared to March. But he did say that the war against inflation isn't over yet. It's a pause, not a pivot.
For the current year, for the year that has just ended, that is 22-23, the estimates are that it will be 7%. But there is a possibility that it could be even more. The data will come at the end of this month. According to all the recent trends, it will not be a surprise if the GDP growth of last year comes slightly above 7%. But let's stick to 7% for the time being. For 23-24, we have given a figure of 6.5%. And we have said that, with a lot of, we have done our internal analysis. Of course, the IMF and other international institutions have given lower projections. For instance, the IMF projects it at 5.9%. I think the whole market was expecting that the Reserve Bank perhaps will take the Reserve Bank will perhaps increase by 25 basis points. But we gave a positive surprise because our assessment was that we have done 250 basis points rate increase. Let's now allow that impact to play out. So therefore, the situation is extremely fluid. The situation is highly dynamic. And I would just like to say that the war on inflation is not over. We have to remain alert. There is no cause for complacency. Especially, we'll have to see how the El Nino factor, what has been anticipated, the El Nino, how it plays out.
All right, with that, let's slip into a short break. Come back and tell you more on all the other things that we tracked today.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family, am I right?
Let's close the deal.
Thank you. Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
CNG car, there's no chance of storage.
If you get a CNG car, you've got to get a carrier.
CNG is good, but to get something, you have to give up something.
OMG! It's CNG! Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
Now is the time to participate in the growth of world-class companies in one of the fastest growing economies.
Beat volatility and make your money work for you 24/7 by investing in the best mutual fund schemes to meet your financial goals.
Multiply your money by profitable investing in size
from India's biggest mutual fund manager.
Bandhan Mutual Fund presents MF Corner at these times.
Presented by Bandhan Mutual Fund.
Let's talk about a bunch of other earnings then. We had Dixon Tech, which rallied over 7% after a strong showing in the fourth quarter. Upbeat management commentary as well. We had revenues for the company rise about 4% on a year-on-year basis, but the EBITDA was 32% higher. Surabhi Sutaria joins in with the details on what the brokerages made of the stock and the numbers itself. Surabhi.
Dixon Tech, like other EMS companies, have reported a really good set of numbers. Now, it beat estimates on all fronts. The revenue was up 4% on a year-on-year basis. They saw 100 basis points margin expansion on both EBITDA and gross margin level. And when you look at the internals, they have reported strong numbers there as well. The mobile and the EMS segment, which is the biggest segment for them, there they saw a revenue growth of 9% and a margin expansion of 70 basis points. On the con call, they did indicate that they have received large orders from Jio, and also volumes from Nokia has increased, which has led to a revenue growth in the mobile segment. The next big segment for them is the consumer electronics, where they have seen a marginal revenue decline of just 3%, but nevertheless the margins have expanded by 100 basis points. They said that the revenue was affected by higher open cell prices in the international market and also a weak consumer demand. Lightning segment saw some weakness, but this has been consistent with the peers. The revenue was down 11% over there. Home appliances and security systems both have seen a revenue growth and margin expansion on a year-on-year basis. All the brokerages have a positive view on this stock. Morgan Stanley, Investec, JM Financial and Nuvama all have a buy rating with a target price anywhere between 2,800 to 4,280 rupees per share.
All right, Surabhi, thanks a lot for that. Let's talk about some more earnings that we're tracking today. Dreamfolks is the other one, 3% higher after it delivered its fourth quarter results.
Thanks so much for that. So on our radar is Dreamfolks. They have reported a very strong set of numbers. The revenues were up 140%. The EBITDA was up 180%, close to 34 crores versus 12 crores same time last year. They've seen a margin expansion of more than 200 basis points, came in at 14.1% versus 12.3%. The net profit has come in at 25 crores versus just 9 crores same time last year. When you look at the full year performance as well, it has done extremely well. The revenues have come in at 770 243 crores versus 283 crores. Their EBITDA is up nearly 3 times, coming at 102 crores versus 34 crores. And their number of passengers travelled has also increased at 82 lakhs versus 35 lakhs, because of which their gross profit per passenger has increased to 156 rupees versus 129 rupees. So with international travel coming back, Dreamfolks has performed really well.
All right, Surabhi, thanks a lot for that. Let's stick with some more stocks. Then we had Sudarshan Chemicals, which gained along with Linde India, but at the same time, Polyplex tanked after it failed to deliver in the fourth quarter. In fact, for Polyplex, the bigger trigger was the promoter looking to sell about 24% stake in the company. The street was hoping for an open offer, but that wasn't to come by. Sonal Putra joins in with the stories on all these three stocks. Sonal.
That's right. I'm tracking 3 stocks. The first one on my radar is Sudarshan Chemicals, higher in trade because of a good sequential recovery, and that is what the street likes. Remember, the first 3 quarters of FY23 were very weak, so an improvement in quarter 4 is something which is liked by the street. Quarter on quarter, revenues are up 31%, EBITDA is up 103%, and margins are up 460 basis points. In both the segments, be it specialty or non-specialty, revenues have actually gone higher on a quarter on quarter basis. The company says overall demand in the domestic and export markets was very weak in the first 3 quarters of FY23, and now it has seen a strong improvement in quarter 4, and they expect it to continue as well. That's why the stock is higher. Linde India, a good set of numbers on a YY basis. There's a revenue growth of 18%, EBITDA is up 41%, margins have gone higher by 500 basis points, leading to a profit growth of 50%, and both their segments have done well, that is the gas and the engineering segment, so that stock is in focus as well. Polyplex, well, 2 sets of news here. One, they have reported numbers which were very weak. Revenues are down 35%. They have reported an EBITDA loss of 4.5 crore rupees and also a loss on the bottom line of 11.3 crore rupees. Additionally, Polyplex Corporation has entered into an agreement with the promoters and another investor called AGP Holdco, where promoter group will be selling 24.2% stake to AGP Holdco, and the aggregate consideration for this is around 1379 crore rupees. Now remember, this has come as a negative news because the expectation was if any stake sale does happen, it will trigger an open offer. So this was not expected to be at a lower level. Yes, it is 17% premium to yesterday's closing price, but still remember the stock has fallen 43% from the highs. So no real trigger for stock holders to go ahead and buy any further stock in this one. And that's why it has come as a disappointment, and the stock declined in trade today.
All right, Sonal, thanks a lot for that. Ashok Leyland was the other stock that delivered an operational beat in the fourth quarter. The margins of the company expanded by 200 basis points. The volumes as well grew by about 22%. We spoke with Shenu Agarwal of the company, and she expects to grow about 10 to 12% in the truck segment the next year.
The recent CRISIL reports say that the MHCV may grow by about 10 to 12%, the trucks, and the buses will even grow faster or higher at about 30%. So we think that overall the industry should grow at least 10% or more, and Ashok Leyland expects to continue to beat the industry growth.
NMDC down 1% despite reporting a 22% growth in the net profit in their fourth quarter on a year-on-year basis. Amitabh Mukherjee, who's the chairman and managing director, says the volume growth could see an impact in the monsoons. The stocks, of course, were lower on account of the general weakness that we saw in the metal stock, but they did have a fair amount of positive guidance to give going forward. Let's hear them out.
If you notice that in March, we did produce around 5.5 million ton, which is the highest ever. The Q4 was a savior. It really pulled the things up. And this year, we expect to do anything between 46 to 50. 2 important factors would be determining. One is how the monsoon pans up at Chhattisgarh. The other thing that we see very optimistically is that the increased capacity of our Kumaraswamy mine at Karnataka.
Some more earnings. Cummins India tumbled over 7% despite reporting a good set. The company's revenue came in at around 1,900 crore rupees versus 1,500 crore rupees on a year-on-year basis. Vivek Iyer joins in with the with internal details of these numbers. Vivek.
Well, absolutely right. A while back, Cummins came out with its numbers. The numbers are a clean beat to our estimates. We had highlighted, even during the preview, that there could be an element of pre-buying that could happen before the new pollution control norms come into effect. And what we are focusing on right now is the kind of commentary that the management has given. At best, it can be described as soft. So the CPCB 4+ norms actually come into effect from July 1st, 2023, and these are for diesel gensets up to 800 kilowatts. So this is where the company has the highest focus in. So what the company is saying is that the power generation market will now evolve based on these new emission norms, and they are saying that this is going to be a challenge going forward. That while the company is prepared with higher priced products to meet these new pollution control norms, they are saying that at this point of time the outlook is still uncertain. Other than that, another uncertain element as far as the management is concerned is that they are saying they are facing continued supply chain challenges, especially for specific electronic as well as other components. So at this point of time, they are saying that they're just cautiously optimistic about the short to medium term demand outlook. Even more importantly, the company has actually refrained from providing any guidance for FY24 at this point of time. Now, when you're comparing it to the other capital goods companies, it was definitely soft, when some of the other capital goods companies have given a much more optimistic guidance for FY24.
All right, and let's talk about the fifth headline today. Mahindra CIE gained over 5% after M&M sold its remaining stake of about 3.2% stake in the company. The shares were sold at a price of little over 447 rupees a piece, which was much better than the indicative price band. However, the real reason why the stocks moved higher were because we saw a selling overhang done. For more details, Abhishek Kothari joins in. Abhishek.
Well, M&M has confirmed our news break. So M&M has sold its balance stake of 3.2% in Mahindra CIE. So the sale price was around rupees 447.65 per share, which is higher than the lower end that they were highlighting earlier of rupees 430 per share. So this lifts the overhang of selling pressure on the stock, because this is a clean out trade that the remaining holding of Mahindra and Mahindra has been sold now in Mahindra CIE. So the M&M got about 543 crores out of this stake sale. Indicative amount was about 521 crores. M&M had earlier sold about 6.06% stake in Mahindra CIE way back in March 2023 at a price of around 357.4 per share. So this is more than 25% in terms of the price rise that they have seen in this stake sale versus the previous stake sale. Kotak Securities was the broker to this deal. Back to you.
Abhishek, thanks a lot for that. With that, we wrap up on this edition of Markets Today. Thank you so much for watching.